Good morning, Bulls. Happy Wednesday, happy hump day, and welcome to the very first Wall Street Wednesday right here on the Unbearably Bullish Podcast, the official podcast of The Bull You Can't Bear. I'm your host, Donald Johns, and if you're joining us for the first time, welcome to the family. If you've been riding with us since Motivation Monday and Taco Tuesday, thank you. You're helping build something much bigger than a podcast. You're helping build a community, a movement, a place where entrepreneurs, business owners, investors, and lifelong learners come together to grow every single week. Today, we're launching something brand new. Every Wednesday, we're going to slow the market down, cut through the noise, and break down complicated financial topics and explain not just what happened, but why it matters. Because here's something I've learned after more than 2 decades in financial services. The people who succeed aren't always the smartest. They aren't always the richest. They aren't always the first. They simply understand more than they did yesterday. And knowledge builds confidence. Confidence supports better decisions, and better decisions made consistently over time can change lives. So grab your coffee, grab your notebook, and let's ring the opening bell. Every weekday, millions of people wake up, open their phones, they turn on their latest broadcast, check social media, look at the market, and ask one question: what did the market do today? That's fine, but I think there's a better question. Instead, ask why. Why did markets move? Why did investors react? Why did one company rise? Why did another fall? Because markets don't move randomly. Markets process information. Sometimes it's inflation, sometimes it's interest rates, corporate earnings, economic reports, innovation, consumer confidence, world events. Sometimes markets move because people become optimistic. Sometimes because people become fearful. But one thing remains constant. Markets are constantly processing information, and understanding why they're reacting is often more valuable than simply knowing why they reacted. The thoughts today. Here's a question for you. Imagine 2 people watch the exact same market close. One person says, the Dow was up today. The other says, interesting. I wonder what caused investors to become more optimistic today. Who's learning more? That's exactly what Wall Street Wednesday is about. We're here to build thinkers, not headline chasers. Every week, we're going to begin something called the Market Pulse. Think about visiting your doctor. What's one of the very first things that they check? Your pulse. Why? Because your pulse provides information. It doesn't tell the entire story, but it tells you something important. The market works the same way. The market is constantly giving us information, not predictions, information. It's reflecting how millions of buyers and sellers collectively view the world at a particular moment. Sometimes the market is optimistic. Sometimes it's cautious. Sometimes uncertain. Understanding that difference can help you become a more informed observer of financial markets. Today's topic: the market is more than numbers. When people hear the market gained 500 points, they often assume everything must be great. Well, not necessarily. Likewise, when markets decline, many people assume, oh, everything's terrible. Again, not necessarily. The stock market is not the economy, and the economy is not the stock market. They're connected, but they're not identical. The market often reflects expectations about the future. The economy reflects what's happening today. That's an important distinction. Markets frequently react to expectations before those expectations become reality. That's why financial headlines can sometimes seem confusing. One day, good news, market falls. The next day, less than ideal news, the market rises. Why? Because markets often react to whether events are better or worse than expected, not simply whether they are good or bad. That's why context matters. And that's why education matters. Let's talk about something we don't discuss nearly enough: human behavior. Markets aren't driven solely by numbers, they are driven by people. People making decisions. People experience fear, excitement, confidence, uncertainty, optimism. Markets reflect those emotions every single day. That's why one of the most valuable skills you can develop isn't predicting the future, it's managing your own emotions. When everyone else becomes emotional, pause, learn, think. That's often where wisdom begins. We'll see you in part 2.